So, do you feel like Harry, running away because you aren't up to date with your tax work? Hey, don't worry, because in this video, we are going to help both you and Harry get back on track. Let's start with a basic introduction to personal income tax. The South African government requires money to fund the various facilities and resources it makes available to its citizens. These services include healthcare, education, and policing. One of the primary ways to raise this money is through the collection of taxes. There are various types of taxes that are collected in South Africa, and you are already familiar with VAT as one of them. Now, income tax for individuals is a form of taxation that is applied to the income that an individual earns and is referred to as PAYE, pay as you earn. This basically means that a person must pay over a certain percentage of their monthly salary to the government. In return, the government will then use part of the money it's collected to provide citizens with the resources previously mentioned. SARS, which stands for the South African Revenue Service, is in charge of collecting the taxes on behalf of the government. Unlike VAT, which is currently charged at a rate of 15% to all citizens, income tax is calculated on a sliding scale. This means that the more you earn, the more tax you will pay. The income tax that a person is required to pay each month is shown on their pay slip or salary advice. In the next video, we will discuss the layout of payslips and explain the meaning of important terms used in this section on income tax. Like this video and subscribe to the Educator channel. The more learners we reach, the closer we get to making quality education a reality for all.